Good evening, friends. How are you all doing today? Welcome to the weekly mastermind show of Ask Abhishek Raj. And this is the special edition in which I was supposed to share some amazing things for you, which can help you literally become financially free for your life. However, there are some technical constraints. My charts are not working properly. So the stock part I will share tomorrow. So don't forget to watch the continuation video tomorrow. Let's take a look on how markets have been, what to expect from the markets, and how you should exactly be positioning yourself in when before you hit the trading floor, what all you need to be equipped with. So let's take a look. Now let me share my screen and let's start the day. So starting with the weekly review of the data, overall, if you look at, it was a good positive week. All the sectors starting from financial services, MNC, FMCG, consumption, energy, pharma, metal, IT, reality, banks, PSU banks, auto, everything was positive. It was a broader and all across the markets positive, with 9% dip in volatility index. That's also positive for the market. The fear factor, the pain factor is going out of the market. So more or less markets are stabilizing and things are going good. And if you can see, metals and autos are one of the top performers. Metal, auto, and PSU banks rising up by 8%, 9%, and 4.5%. If you remember, the picks that we had last week was Bank of Baroda. We already had positions in Tata Motors, and we already had positions into Tata Steel and Hindalco both. They are doing amazingly well, making good amount of money. Rest, there is more that you need to know about the markets, because actually the opportunity has just begun. This is the time, if you invest wisely, you can actually become financially free. How? I'll tell you at the end. So now let's take a look on how markets are supposed to behave this week. So this is the weekly chart of Nifty. If you take a look, Nifty has closed at the 4 weeks high. Let me just bring out my highlighter. Okay, so if you see these two lines, the red line and blue line, these are the 20 and 50 days moving average. The only thing that we have to look at is 20 days moving average, 20 week moving average is extremely stressed out. It's very far from the market. So, in case markets take any dip, there could be some sort of correction to consolidation. However, no such things as of now. Remember, indicators tools are used to confirm the market opinions, not decide the market opinions. Markets do not run on indicators. Indicators are formed on markets, on prices. So let the markets react first, then you can confirm those views with the markets. But again, you should be aware, you should be, you should have all the holistic view in your arsenal. Only then you would be able to react right at the moment. So two things that you need to know on this particular chart. One is for your information and one is for which you can use for trading. Now, if you see this red line on the top, red trend line, and this red trend line, the bottom RSI. So this is called a divergence. When RSI makes lower highs and prices make higher highs, this is what people normally follow. And I would advise you not follow this. Reason is very simple. Again, see, when markets are into overbought zone, like this area, here you could have followed, but here, no. One RSI is approximately 65, 70. This doesn't make sense to follow any kind of divergence, because reason is very simple. Since last few days, since last 2 weeks, markets change was very small. So RSI fell. That doesn't make much difference. The only thing that you should be looking at, the blue RSI support. If you see the blue trend line, that's the support trend line on the price, support trend line on the RSI. RSI is making lower lows and price is making higher lows, which actually means the strength of selling was high, but prices absorbed it. That's the sign of extreme positivity. That's the sign of extreme strength in the market. So markets are strong. Don't worry about it. Plus, remember the 4-week rule. Markets have closed above 4 weeks, so it's positive. One thing on weekly chart is, in case of any decline, The support level that you should be keep a watch on, 12,450 level. That was the previous high of Nifty. So that's talking about the change of polarity concept. In case markets correct, maximum correction that you could be looking at is 12,500, 450 levels. So that would be the support that Nifty will get in case of any major correction. Let's take a look on daily chart for more minute details. One thing, the resistance of 13,140, which Nifty was struggling, has been broken. The big red candle, it's already broken. So 13,140, again, remember in the previous session, that is the Friday session, what happened when Nifty fell? It took support exactly around the same level, around 13,140, 45 odd prices. So that's the symbol, that's the sign that markets is bullish. That's the change of polarity. When supports become resistance, when resistance becomes support, and it's confirmed by the market. So the first prices on any decline you should be looking at is 13,140. The first support, or you can say stop loss, that you should have on Nifty is 13,140. So until Nifty is trading below 13,140, let's round it off to 13,100. So until Nifty is above 13,100, markets are bullish, markets are positive. That's it. Rest on daily RSI, if you see 60 support, one more positive sign. So things are good. Let's take a look on Bank Nifty. Well, Bank Nifty is into its congestion zone. If you look at these big red candles, these are the candles of January month when markets went into correction. Bank Nifty has already taken off the second last big black candle, and right now trading close to the big, the last big black candle. And that's going to be the next resistance on the upside, and that's placed around 13,600 to 800 on the upside. So in case markets go up, keep a close watch around, in the price band of 30,500 to 30,800. That's the next concession zone. Above it, sky is the limit. There is no limit on Bank Nifty. Even Bank Nifty's weekly RSI is approaching near 60. So possibly we are going to take some support here. Let's see how. One thing important. Now, if you take a look on these two 20 and 50 days moving averages, 20 days moving average has touched the 50 days moving average. Rather, it's week moving average because it's weekly chart. So 20-week moving average has touched the 50-week moving average. Any crossover, in case Bank Nifty continues to go up for coming 1 to 2 weeks, it would be a golden cross. Golden cross, again, understand Nifty is trading approximately 6-7% positive from its previous highs. Bank Nifty is still 10% negative, almost 7 to 8% negative from its all-time high. So what I'm talking about, in case this happens, this opens up room for at least 10% rally in Bank Nifty, or maybe more than that. So be very watchful. Next coming weeks could be impressive. Rest in any kind of corrections, I'll share the price level that you need to keep a watch on. So now let's take a look on daily chart of Bank Nifty. If you take a look on daily chart of Bank Nifty, the last week price range that was given to you was 30,000 to 29,000 approximately. So that's the box in which Bank Nifty is trading. It has closed right at the top of the box price range. So what we are looking at is Bank Nifty should open positive and should continue positive. In case Bank Nifty continues positive, you can go long with stop losses placed around 29,800. That should be your first stop loss in long positions. However, in case Bank Nifty fails to cross that level, please wait for the lower band of this particular support range. That is, you should be buying below 29,500 with stop losses placed between, depending upon your risk appetite, it could be 29,150 to 28,800. That should be the support range in case Bank Nifty falls. But in case it goes up, you can continue long. But remember, your first targets are 30,600 to 800 on Bank Nifty. So if I were you, I would prefer buying Bank Nifty above 30,000, 600 to 800 level, because that's open up the range on the higher side. At this point of time, a Bank Nifty opens, let's say, with a gap of 300 points, or let's say 400 points. What's going to happen is your upside resistance, your upside targets are going to be very small. On the downside, your risk would be higher. So risk reward ratio is not justified at this point of time. So if Bank Nifty opens around 30,000 or flat and sustains above 30,000, you can go long. Your risk reward ratio is justified, 1:3. But in case you get Bank Nifty around 30,500 or 400, your risk reward ratio would not be justified. Rest, Bank Nifty even has taken support on daily chart, 60 RSI. That's very bullish. So continue your long position. That would be all about Nifty and Bank Nifty. Let me share some views about other sectors, how you should be playing the other sectors. So let me take you to my charts. So let's start with Nifty Auto. Nifty Auto closed big green candle above Bollinger Band, bullish, continue your long positions. Consumption, continue your long position, bullish. Energy, kind of hanging man chart pattern, but again, it's not bearish so far. Just be precautious. Financial services trading sideways, so buy on dips, but again, the best part is it's now this consolidation has settled the prices, and 20 days moving average has come close to the prices, so which makes perfect sense to buy. You can initiate long position. 20 days moving average 13,970 would be your index stop loss for financial services stocks. FMCG looks very nice, has given a breakout, go long. IT, well, looks like it's facing resistance on Bollinger Band, but again, more or less RSI is kind of taking support on 60. So in case the IT energy index breaks the high 22,440, you can initiate long positions. Metals are extremely bullish. Long, in case you enter now, your stop loss should be 29,030 on index levels. It's extremely stretched. So in case you enter, please remember your risk on the downside would be high, but it's worth taking the risk. If I were you, I don't mind taking risk. Pharma, good. Pharma has tested its kind of highs of, I would say, this is September 2020. So on daily charts, let's check the weekly chart of Pharma index. Again, very nice chart pattern. More or less, we have tested the highs. In case you see any positivity in tomorrow's session, we'll be crossing the higher end of Bollinger Band, and we would be breaking the all-time highs technically for at least last 1.5 years. So you can initiate long position. Even Pharma index has taken support on 20-week moving average, extremely nice. So more or less, you can say a good uptrend, a good consolidation, 20 days moving average support. Pharmas are in sweet spot. Go long. I had recommended Oro Pharma in the last session as well, doing pretty much well. So Pharmas, go. So that would be all on indices front. Now let's see how our stocks are performing, and then we'll talk about what you could be doing in the markets on the stocks front. That is something that I'm going to share with you in next session. So Tata Steel position open. Our targets are done. We had a target of 600 plus. Currently, it's trading around 623. Targets are done. If you wish, you can book your profits, or you can continue with stop losses around 590, 95 levels. You can trail your stop losses, or maybe you can book a partial profit as well. Hindalco, our targets are 260 to 280. So we are very close to the targets. Hindalco is already crossed 250. It's trading into 20% profit within what? It's not even a month, like what, 15 days. This trade was given for the week of 17th to 20th November, both Tata Steel and Hindalco, both doing all above 20% profits. Book some profit, or alternatively, in case you have both of them, book one. I would say book Hindalco, leave Tata Steel, that's doing better. Larsen and Toubro, positive in 9.5%. Continue the position. HDFC Bank, it's positive, continue the position. Not positive, rather it's very close to our buying prices. You can add more on declines, that's not a problem. Tata Motors, I would say, in case it doesn't continue to go up, I would say trail your stop losses around 180, so that you can exit your position in 7.5% of profits. Rest, I'm going to recommend some auto stocks tomorrow. Orvindo Pharma that I had recommended in the last week's mastermind show. Uh, Again, its targets are 950 plus, currently trading around 901, 2.9% positive, continue long. Bank of Baroda, it has crossed the resistance of 54.55, and I had recommended around 51. The target is 70. 60 is already done. It's trading almost 16% positive. So continue your long position. Rest, I'll share the updates tomorrow. Now, this is what I wanted to share with you, why, which makes this special edition, this edition is special one, for which the continuation video would be shared tomorrow. So don't forget to watch. See, if you are following the markets for last few years, you would have seen mid caps indices were not performing, and right now they are in the flavor. You need to understand the entire economic cycle. If you look at the history of past 50 years to 100 years of stock market, the mid caps and small cap perform, or rather outperform, the broader indices whenever there is a low tax, low interest rate regime, there is a speedy economy recovery, that is after any economic crisis. This is what makes a lot of money, mid caps and small caps. So rest, in a normal market scenario, when markets are normal, into 2019, things were like every year markets go for like 15-20% correction. So that happens, that's okay, that's perfectly fine. But again, after any major market crisis, the multi-bagger returns that you get is into mid caps and small caps. So you should have, at this point of time, you should be considering or picking up some good mid caps, good small caps with good fundamentals and good technicals and good future perspective for 3 to 4 years. And if you are an F&O trader, and if you are able to hold 2 to 3 positions in your portfolio with some techniques of hedging, it can make you financially free for your lifetime. So on this note, I will end this particular session. See you tomorrow again in the same show, same views, and wish you all the best. Happy trading.